Good morning, everybody. My name is Brad Latchett. I am the Director of Government and Industry Affairs, the Professional Insurance Agents of New Jersey. I'd like to welcome all of you to the next in the Deep Dive series presented by PINJ. Today, we are going to be focusing on personal lines and small commercial. As I mentioned, my name is Brad Latchett. I'm going to introduce our panelists real quick, and then we'll get into it. I guess before we start our discussion, I should mention, if you want to ask a question, please do so in the chat. Questions are absolutely encouraged. We would love nothing more to have all of your questions throughout this. I can tell you this group is incredibly knowledgeable and really, really good on their feet answering questions. So, keep them coming. So with that, let me just introduce our panelists real quick. We have Connie Mahoney. She is the president of the Professional Insurance Agents of New Jersey and an agency manager at Mark Anthony Associates. We have Walter Conroy joining us. He is the current chair of the Professional Insurance Agents of New Jersey Communications and Business Issues Committee, as well as secretary of the New Jersey Young Insurance Professionals, and vice president of commercial lines for Liberty Associates. And then we have Darren Shaw, Esquire, an E&O attorney for Utica National here with us. So thank you very much, all three of you, for joining us. I know this is going to be a great discussion just from the conversations that we've had in the past. So let me just get right into it and talk a little bit about maybe new business. Question for Connie and Walter. When you have a new client walk through the door, do you have a procedure that you go through in terms of have a checklist of how you protect yourself and how you provide service to that client?
Connie, you want to go first?
I'll go first.
President's first.
So for me, I start with obviously name, in personal lines, name, address, date of birth, address, what they're looking for. If it's auto and home, I need their driver's licenses, social security numbers, et cetera, et cetera. If it's commercial lines, I include the name of the business as well as what they're doing. And then I created a little activity in our agency management system, and I type that stuff in there. So it's there even before, just besides a little account name with that information in it. So it's readily available when I'm working through the quote process. Yeah,
definitely. Similar here. We have two centers of influence when we have someone walk through the door, whether it's a relationship that from a referral or it's literally someone knocking on the door, which we have had more of than I can remember being here for the last 7 years. Everyone's really just, coming into the office, just seeing, hey, my insurance premiums are going up. What can you do? So with that, of course, we have a process that we want to get to know what we're insuring. Obviously, we want to get to know their assets, what they care about. And, we would like to see what they currently have. Obviously, looking at their current deck pages is certainly a plus. And then we, go from there.
Darren, question for you in terms of that new client process. I guess, do you have any suggestions for agents when they have those new clients coming through the door, whether it be, a set checklist or procedures or something like that?
So, I think each client's going to be different. So it's difficult to really stick by a set checklist. I think there's commonalities to all new clients when they come in the door. I think the first, in terms of an E&O perspective, what we see sometimes is a failure to mirror coverage. So it's definitely important to get those prior policies, look at the exclusions, look at the coverages, make sure that those coverages that they're coming to you with are mirrored on the new coverages that you're going to provide. And of course, that's part of a discussion that you're going to have with your client to make sure that those prior coverages were sufficient, limits were sufficient, any changes, that they're coming over. A lot of times, I know you guys see new clients coming in for change in premium. So we see a lot of issues where the agent is able to get a reduced premium, but at the cost of maybe some certain coverages being left out. So when you are looking at the prior coverages and procuring new coverage, definitely make sure that there is that mirror there, unless there is some sort of communication from the client where the prior coverage wasn't necessary anymore, or something has changed requiring new coverages.
Man, it's so cool having you here, Darren. I don't think we jumped in yet on this, but having an E&O attorney who sees these types of claims every day, You know, it's so I was excited to be part of this panel, but I don't think I'm going to talk much because I'm just going to let you keep ripping.
Well, this is all I do. I do litigation. That is all I do. So
That's outstanding. And great point too. I mean, mirroring coverages is certainly something that I believe is one of our bigger E&O exposures. We have someone come in that may have a smaller deductible, $1,000 all peril deductible. Well, hey, we could beat your price by $500, but you're going to have a $5,000 peril deductible and a 5% hurricane deductible. And all of a sudden we start walking into some pretty big issues when we're not, like you said, mirroring those coverages.
right. And you'll hear me say it a lot over the course of this deep dive session, but get everything in writing. That, if there was one piece of advice that I could leave everybody with, document everything as best you can.
Yeah, that
So
was the
if
theme
you
of the
are-
conversation the other day. Document.
Exactly. So if you are going to make changes, if there are any changes that come out of those conversations with your agency client, memorialize them in writing in an email. It's sufficient. I know a lot of this stuff goes on over the phone. Just a quick follow-up with an email is really all it takes to just say, hey, listen, following up on our conversation, just wanted to confirm that, we're going to increase your deductible to 5,000. We're going to drop this coverage because it's not necessary anymore. Or you don't have this house anymore, so we're dropping that coverage. Just a quick email is really all it takes just to confirm those changes if there are any.
My big thing too is when you're trying to mirror coverage, you cannot arbitrarily make the decision that if a client has $2 million worth of coverage A on his house on one policy and you move them to another, that your new replacement cost estimator that drops them down to 1.5 is sufficient. That I always worry about that. I try to mirror it as close as I can, even possibly pushing it up to match exactly, regardless of what my carrier says.
Yeah, that's an excellent point. And I think we're going to touch on this a little bit later on in the session, but COVID has really kind of changed valuations of construction costs, labor costs, material costs. So if somebody comes to you with a $2 million coverage, a $2 million limit, definitely worth having that conversation, to say, listen, I would recommend that you have a professional builder come in and give you an estimate on the replacement cost value. We can use that. Definitely leave it up to them to provide you with the value.
Yeah, all too often, we have replacement cost calculations that our carriers, give us to get an estimate on what that replacement cost value would be. But really, and it's a good point because I'm not sure that we do a good enough job ensuring that the client knows it's really your decision to come up with this coverage. Yeah, we can get you in the ballpark, but we're not appraisers. We're not contractors. We don't know exactly how much it's going to cost for you to replace that house. So, this is what we think is going to get you there, but you really need to tell us what you're comfortable with.
That's a great point, Walter. I think that there's a tendency or a wish for agents to come off and say, I know everything about everything, right? But it's okay to say, hey, I can't get you there, or I can't help you here, right? If you pretend to be an expert, you're going to get yourself in trouble, right? I think being truthful is probably the best policy, right?
I think also don't wait those first 60 days expecting the insurance company to come in, inspect, and bring it up. Those first 60 days, if that house burns down, it's on you if you missed it.
You would not believe how many claims that we see that come in, either just before the renewal or just after. It's never mid policy. It's always right on the cusp somehow.
Of course.
First day with the carrier, brand new risk. Yeah. Oh,
Exactly.
great. $1 million fire. Cool. But it should have been insured for 2 million. And that's a problem.
Yep.
So again, going to Connie, Walter, curious how your process is different for maybe a new client versus somebody that you're, or maybe not, somebody you're BORing. I get this would be a new client, but the BOR process versus somebody walking in through the door with no insurance at all or something, new insured.
For me, with the BOR, as much as I hate having to do the whole new app thing and all of that business, the carriers want a new app. There's most of mine, especially in commercial lines, they want to see a whole new application from you
Mhm.
that's going to tie it up in a bow. So getting the prior deck, but it really, you have to take the same process of when were your updates. And the hardest part in commercial lines is when they say, oh, well, they're current, I changed the toilet as needed and all of that. And that doesn't really answer our updates, which are the big questions for our carriers, which is the plumbing, the heating, the roof, and electric. And so I just almost have to start from scratch. How about you, Walter?
Same thing, absolutely. Especially on a BOR. Hey, great. We have a new piece of business. That's the most important time to write our checklist. We have a checklist that we would use for any new client. We need to make sure that what coverages they have versus what's available for sure. Oftentimes you might have a $500,000 limit on your bodily injury, but only have $100,000 in UIM, which is I see all the time, especially policies coming from it wouldn't be a BOR situation, but let's just say that when the liability and the UIM doesn't match, that's a big problem. So oftentimes we want to run our checklist on a BOR because the prior agent who wrote the initial application certainly could have made a mistake or just didn't write it right. And then that burden, once we sign that piece of paper and it comes over to us, that's our responsibility now, in my opinion. So that's why we have to go through every line onboarding that client, regardless if it's a BOR or a organic piece of business that we are running from scratch.
Very interesting. Do you ever ask for a prior policy?
Yeah,
I do.
yeah, absolutely. And oftentimes seeing the prior policies where I even tell the guy, I'm like, hey, you can, if you think we see the price and we're going to we have nothing to do with the price. Send it over to us. We want to see the coverage limits. Oftentimes I'm going to suggest ways to enhance the coverage. And it helps knowing what you currently have versus what you can get. If that makes any sense.
Absolutely. Absolutely. Connie, anything to add there?
No, I would say the same thing, but I also have found with a couple of my BORs that coverages they really don't need are on there, and coverages they don't need are on, and coverages that they need aren't. One that often gets missed commercially is EPLI, any kind of EPLI, because that's a big save. So when the policies come over and those pieces are missing, it's our job to show the client what's not there and try to build into a policy that's going to protect
That's good. Add that for the next deep dive. Love just a little soundtrack in the background.
That's definitely a dance tune.
Yeah, that's good.
No, Connie, you're absolutely right. Those coverage levels, even on a personal side, we see a lot of HO3s with a sufficient dwelling amount, but you're missing service line, sump pump, water backup. You're missing, these enhancements that you could get. But if we just take a BOR, bring it over and don't really check the coverage lines, that could be missed for years. And then when there's a claim, and they could have had the coverage and we didn't even offer it to them, that's a problem.
Really good point. Actually, on that point, in terms of coverages and offering it to clients, maybe this question for Darren. What responsibility does a producer have to be aware of the coverages that are out there? I'm thinking about new coverages that come out every day. What's the liability if an agent doesn't know about a seepage endorsement or something? Is something that we brought up in the past.
Yeah. I mean, that is an issue that we have seen. We actually had a case that we took to verdict last year or 2 years ago in New Jersey, where the agency client had requested UIM coverage on the umbrella. And at the time, it wasn't available in the marketplace. And so the agent advised the client, it's not available. Agent said, okay, that's fine. I'll take what I can get. Something like 11 years later, the coverage was available through, I think, RLI maybe. And sure enough, the agency client, the son was in an accident, pretty severely damaged, injured. And the agency client brought a suit against the agent saying, hey, why didn't you let me know that this was available? And they argued at trial that, listen, aren't you part of New Jersey PIA? Didn't they send out an email to you letting you know this coverage was now available? Don't you belong to these other industry groups? You knew that this client was interested in this coverage. He brought it up to you. Why didn't you let him know? We ended up getting a defense verdict in that case, thankfully, but it's definitely it's an issue that's out there. It definitely pays off to be up to date on available coverages and to know if they might be applicable to some of your clients. I know it's a lot. It's a lot to stay on top of, but it is an issue that we see.
It's definitely a lot to stay on top of. I mean, I can think of two right now off the top of my head, the seepage endorsement being one. Typically, that's always going to be something excluded on a policy. All of a sudden, a carrier rolls in a seepage endorsement, which is going to cover groundwater coming into your basement. Really? Okay, that's kind of a problem, because we have X amount of policies with this carrier. Now we communicate with every single client that this coverage exists.
Right.
And then yet alone that they're very picky around some of the areas where our office is, especially by the water. And then, okay, well, the coverage exists. We just can't put you with that carrier because they wouldn't accept you. But at least, just that effort alone should, at least put up a line of defense for us. And the other thing I see is flood coverage in a basement. So your standard national flood insurance, your FEMA policy is always it's very, very limited coverage in a basement, whether it be building and or contents. But now we have these private carriers coming in offering basement contents and building. They'll get your whole entire finished basement back up to where it was pre-loss, and that is something certainly a typical flood policy would never cover. So I've had a handful of conversations with clients in the past about what was possible to get then, but oh my gosh, now that the market's changed where it does exist. So if you're trying to remember to go back and have those conversations with the clients who ask those questions is tough, but it's certainly something that agents should be thinking about.
Yeah, and it's not always enough to just do it at renewal. And again, going back to the document everything, a simple email out to your clients to just say, hey, this coverage is now available on the marketplace. If it's something you're interested in, let us know.
The other one is and I think it's very big now, is the renovations. Because a lot of the guaranteed replacement cost endorsements disappear. Isn't it 10%, Walter? Is it 10%? If you 10 or 15%, if you improve your home where it goes up more than 10% of coverage A and you don't advise the carrier, you lose guaranteed replacement.
It could even be as small as 5%. I'll let you know in a few minutes on that for sure, but you're absolutely right.
So if you're not finding out if your customers are putting in addition or even renovating a kitchen or something where the dollars and cents is too much, if there is a catastrophic loss, you may think as an agency you're protected by guaranteed replacement cost, but without that knowledge, you are not.
Absolutely. And in the COVID, the post-COVID world we live in, who was doing renovations to their homes? Everybody that was stuck in their homes. So they were, all the contractors were quite busy during that time. So I have to imagine a very, very large percentage of your homeowners book had these kind of renovations to their house, didn't inform us. That certainly leave them a hole with the guaranteed replacement cost endorsement.
And I'll add, even if they do advise you, construction plans change all the time. We've had cases where, on a bigger scale, where they're, building a house, they would advise the agent of the estimated square footage, the construction materials, the costs, and then 6 months down the road, they decide that they want to add a bowling alley into the basement, or that they want to, change the exterior to limestone, or put marble, Italian marble in the kitchen. All these changes are going to have a significant impact on the replacement cost, and there's never any communication between the client and the agent about those changes. So it's it definitely behooves you to follow up, at a renewal, or just periodically, to just make sure everything is still on track from what they originally told you.
Absolutely. We had a builder's risk policy not a few weeks ago. Very, very nice home the insured was building, $3 million house. Okay. Came up to the renewal of this policy, you know, just making sure the limit's okay. He went to 4.5 million. So a house that was originally 3 million, he added $1.5 million more into his budget, into this build. So that's a big gap. We were underinsured for almost $1.5 million by the time this thing was completed. So you're absolutely right, having that
Yeah, we
conversation.
see that a lot. Yep.
Spinning that, and I guess we're talking about renewals here. What's your process? How is your process different for renewals? Or how often do you go back and kind of revisit clients and say, we need to check up on and make sure their coverage is still adequate? Connie first.
Commercially, with every renewal, because the contents in a commercial policy, the buildings go up with inflation, the contents do not. Not with any of my carriers, or not with most of them. So I always go back, especially in medical offices or even beauty salons and things like that. Like your equipment. I love it when a nail salon who's got 15 pedicure chairs tells you that their contents is 15,000. It's like, come on. So I try to push those limits and those buttons, and it's always about, you're leasing this equipment. If it burns down, it's on you. And try to get real numbers from them. It works some of the time, but I always, or most of the time, will say, hey, your contents is XYZ. Have you changed anything? Would you like to increase it? On the building side, some of my carriers haven't, now they are, but they were not increasing the buildings enough. So I've actually, one of my carriers has a standalone replacement cost estimator, and I've actually taken the time to run them myself and sent them to the client. I had one guy that told me, I don't care if it burns down, I'm bulldozing it over, but at least I had it in an email. So that, I feel like that protected me. I gave him the option, and that was his answer. So commercially, that's how I handle it. Personally, I'm pretty friendly with a lot of my personal accounts because my strength is in the commercial line side. So I usually know what my personal lines clients are doing. So I poke around and ask them, hey, what did you do? I think we should bring this up, and we'll have the conversation. I actually had one client not too long ago tell me he did so much that he wanted the insurance company to come back in and inspect to make sure that it was insured properly. And then of course he forgot to answer the call, but we push that through. So yeah, that's how I handle it personally. How about you, Walter?
Renewals, personal line side. I mean, it's volatile right now. We're seeing increases, obviously, due to rate and due to the cost of, inflationary factors on the dwelling amount. So we have a ton of contacts with our clients on renewal. We used to say, hey, let's look for a 5%, between 5 and 10% increase on renewal, because we can obviously capture their current premium. We can capture the renewal premium when it downloads. So we can kind of pinpoint and flag who we really need to communicate with from a remarketing effort. The remarketing task flow is quite full right now, obviously. I mean, we are trying our best to make sure that the guy down the street isn't going to take our clients because that they get a letter stating that company X has requested a 27% rate increase. So we are capturing these on all of these renewals. We really are having the conversations with the clients more frequently than we ever did historically, just due to the volatility in the marketplace.
But I will say that I've had a couple of conversations where someone calls up and says, hey, my premium's too high. And I get into the fact that a homeowner's policy is not a warranty policy. It is a policy basically that is there if your house burns down. We have to look at this from a catastrophic loss. And if your coverage A is, we'll just say 500,000 for conversation purposes, a $500 deductible is just darn stupid today. And it's really a question of how much you can absorb to be able to take on the loss. This is exactly what happened 15, 20 years ago in health insurance when we were asked to have deductibles and pay portions of our our healthcare. It's the same thing in the home insurance. We're being asked to be partially responsible for paying for our losses. And to me, quite honestly, a $5,000 deductible on a $500,000 loss, where you've still got the ordinance of law and the other pieces that can help you get through, if you can keep them where they are for a higher deductible, then risk moving them where they might need a new roof, or they might need to do their sidewalk, or any number of things that carriers are getting tight on. That's a really more important conversation.
Absolutely. And sorry for the dings. I've been trying to find the answer to that replacement cost question, whether it's 5 or 10%. I think it's 5, but I keep getting all these dings, so I keep stopping. Absolutely. And you bring up a good point too. Law and ordinance coverage is something, I don't know, Darren, I don't know if you've ran into a situation like this, but law and ordinance coverage is typically the carriers will give you very little bit. I think it's like 10% that they usually give you. For homes that are in a flood zone and you have a homeowner's type peril, like wind event, fire really being the big thing, they would have to build that house back into flood compliance, even though it wasn't from a flood. Without having law and ordinance coverage on the homeowner's policy with a proper limit, the expanded, whether it's 50% or even 100% law and ordinance coverage you can get, that could be a big exposure for us too, because they're not going to be able to indemnify them. They're not going to be able to build back the way they need to be to code. And that could be what, $40,000, $50,000, $60,000 to raise a house that could be coming out of pocket.
Yeah, we do see that for sure. Law and order, both on the personal line side and commercial. I've got a case now down south where there's some ADA compliance issues in a church, and those costs can really add up really quickly.
Yeah, absolutely. So that's something we try to, we do a lot of coastal business. So home, we write the home and the flood. So we always have to make sure that we're increasing that law and ordinance coverage in these flood zones, just because the town's going to be knocking on your door. God forbid you have to rebuild, and they're certainly going to make you raise.
Mm-hmm.
So, Walter, you mentioned kind of the market volatility, and I'm curious how you talk to your clients about kind of the volatility and what's happening in the marketplace now with, premiums kind of going crazy and certain carrier appetites changing.
Luckily, you could watch TV and hear the word inflation probably 40 times. Just watch the evening news. So a lot of the conversation, it's not like we're starting from scratch with them. Our clients get it. They do get that with inflation, everything's rising. We just communicate clearly with our clients that, in insurance, it costs way more to replace and repair property than it did just 24 months ago. You can even use the old, the old adage, you have a $400 fender bender 5 years ago, but with all these cars that are so sophisticated in their electronics, that $400 fender bender is now $5,000. And now you law of large numbers, you cross that, add that up across the board. You're talking about massive losses these carriers are having that maybe they weren't anticipating that they would have. And then, of course, the same thing, tree falls in your house, it's going to cost, 35% more to repair that damage than they would have estimated just a few years ago. So the conversations with the clients, they get it. They do get it. And it's a conversation we're having with every single client, really. It's very rare where I get to tell a client that their premium went down 5%. So I'm sure, Connie, you're kind of in the same boat. But of course, and just coming back to what we're, the kind of the theme of the day and the E&O exposure, we're moving a lot of clients to different carriers, remarketing everybody. Sometimes they're staying exactly where they're at, and we give them, our clients the peace of mind to know that we went to market for them. But even though they had a 10% increase, it's still quite competitive. But oftentimes we are moving full packages, and we're moving our small commercial businesses, we're moving large commercial. So when doing that, that does open up the potential to have a situation where, first topic of the day, not mirroring the coverages right. Whether it be a carrier on your commercial auto who is symbol 1, all vehicles. And now, hey, we can save you 20% on your auto, but it's symbol 7. do we realize that those little things can become a big bite later on?
That's a good point.
Yeah, and on that point, Walter, I think if there are, I think one of the best ways to handle that is to really just provide the agency client with options. If whether it's 2 or 3 options, and then let them decide what suits their needs best, instead of saying, hey, this is what I recommend. Say, this is what I can get you. You tell me based on your needs what fits best, and I'll get it for you.
Yeah, absolutely. We were talking about the other day, don't
Mhm.
just say, hey, here it is. This is the way, this is the way we suggest doing it. You couldn't have said it any better. I mean, hey, here's your options. That way you get to pick. That way, when you do have a loss that may have been covered on a form you had 2 years ago, isn't covered, at least we have some protection behind us.
Yeah. Yep.
Good point.
That was on one of my new business clients. And let me say that I had a client call for business coverage. And in going through the interview process, he told me he had a delivery business. And then he went on to say, after many questions, that he is going to be delivering cannabis. What we were able to do is offer him 2 scenarios. One, where he is just going to insure the office space, and 2, where he is going to insure the business operation. We're looking at a difference of between about $1,000 and $20,000. The client obviously is going to go for just the office exposure, but because he's answered it in the email, at least, and we did a very good detail outlining what he's not getting covered for, I feel like for now we're safe. I hope.
Yeah.
And that's, that's a best practice, I would say, Connie. What you're not going to want to hear is that to err is human, and I'm obviously not speaking about you specifically, but just everybody on this meeting. To err is human, and there's going to be issues that come up that you could never have foreseen. And there's unlimited potential for the agency client to find something that they can hang their hat on, and an attempt to recover for a deficient loss in coverage, recover through an E&O exposure. So there's only so much that you're going to be able to do, and I'm sorry to have to tell everybody that, but it's the truth. And there are things that will certainly greatly minimize your exposures, but it's impossible to remove it entirely.
Absolutely. So we obviously talk document, and communication, has to be that number one, the number one focus, really, I think, in helping us create those safeguards. Have you seen any other type of crazy claims that have come up with maybe coverages that are new in the marketplace? For instance, law and ordinance, we talked about maybe, for instance, flood coverage. I mean, typically $250,000 was the max FEMA would offer on a building, but you have one of these $3 million beach houses in a private market's offer $2 million. And we never quoted we may never provided an option for having either more coverage or even excess coverage. Have you ever seen a situation like that where, a product is offered, or let's say a higher limit was offered, but and a loss occurs and they weren't adequately covered?
We don't see a lot like that. Yeah. And it may be just the fact that new products that are coming out now, it has to catch up. The exposure really kind of has to catch up. So it may be something that we see that's more prevalent in the future down the road. But for right now, we don't really see a lot of that.
Gotcha.
So at the beginning of this, Walter, you mentioned windstorm deductibles and things like that, and policy changes that might happen at renewal or even midterm. I guess, what's your responsibility or what do you do to communicate those changes to clients?
You know, that's interesting because the carriers are changing their forms, they're changing their deductibles. They're usually sending one page in the start of their nice little 400-page booklet that's saying, hey, we've taken away guaranteed replacement cost. You're going from a $5,000 deductible to a $25,000 deductible. This is one of our high value homes we have with a carrier that recently did that. Didn't communicate very well to us, the agent, the carrier didn't, that these changes were they were coming across the board. So we were almost shocked when we took a look at it when we were remarketing it. Like, holy smokes, this guy went from a $5,000 deductible to a $25,000 deductible. He also had no hurricane deductible and now has a 5% hurricane deductible, $1.3 million house. So that's a pretty big bite. God forbid that hurricane finally comes. So again, why we need to look at these renewals. We need to see what changes are happening. And then we need to certainly have the conversation with the client, because Darren, you probably can answer this better. I'm not sure if the carrier putting one sentence on the front page of their renewal policy that says, please review these changes, is if that's going to cut it or not. God forbid there is a loss.
Yeah, we see a lot of that, particularly through wholesale brokers, whether it's excess and surplus lines. The communication coming from the carrier is not always really in your face enough for the agent to be aware of these changes. It's important really to just really kind of go through the policy and make sure everything's the same at renewal. Even just have a conversation with the wholesale broker or with the carrier directly and say, listen, just want to make sure nothing's changed on this. Are we able to represent that this is the same coverage that they had before? Really kind of put it back on them as much as you can to make sure that what they're providing is the same as what they provided before.
Definitely. That's why we actually started, we have a little carrier spreadsheet of what changes they've made, of course, what's our max coverage, things like that. But even the major kind of red flags that these carriers are having and who's communicating well to us, we know who communicates well. We also know that some of these marketing reps are kind of busy, probably flagging a ton of inquiries into why their premiums are going up 40%. But at the same time, they're not communicating with us nearly well enough to anticipate these major policy level changes.
Yeah. That's definitely something to be wary of, to be careful of changing coverages. We see a lot with there's certain coverages that seem to be problematic. There's always an issue with the protective safeguard endorsement. There's always issue with coverage for being removed for subcontractors. You'll find from carrier to carrier that they seem to be moving in step with either adding new coverages or removing new coverages. So if one or two are doing it, chances are more of them are doing it as well.
Sure.
We have to be careful of is who's checking the policies. You have to make sure that the staff people that are checking them are particularly aware of what changes to be looking at. If you just have somebody attaching policies to client screens and they're downloading, it might go right by a service or a CSR that's handling it, because that clerk is just he or she's just doing that. It also can happen when you're doing AI batch processing and it's dropping it into your system. You really have to know to go back and look at the decks to see what's changing.
Absolutely. That's why it's imperative to use those same checklists you would use on a brand new piece of business walking the door on these renewals. Things change. Also, there's the coverages that can be added to a policy that may not have been added the first go around. We typically we have it's your centers of influence and what's bringing business in. We have a lot of real estate agents that provide us with leads, and we provide them with homeowners quotes, and really what they care about is getting to the closing table. A lot of times ratios are a problem, so they want the cheapest possible option they can get. Typically in that case, we can we can get you to the closing table. We can increase deductibles. It may be slightly underinsured. There's no bells and whistles to it whatsoever, but we are certainly going to have the conversation that the second we bind this policy, prior to it even going into effect, we're jacking all these coverages back up to where they should be. So God bless, you're going to get to close, but the homeowners is going to be about $300 or $400 more than it was, because we are going to increase the liability coverage. We are going to add sump pump and water backup and all the, what you can say, bells and whistles. But we have to make sure we do that, because providing a policy as to a new home buyer that's, I guess you could say cut rate is certainly an E&O exposure. But making sure that you're vigilant and reviewing these policies, because maybe you have a higher deductible than you should on a policy when you wrote it first, and you want to bring that back down for sure if you miss it, initially.
One of the
Yeah,
things
and
that I ask for also is I always ask for the appraisal on a new piece of business for a new property. I lost an account years ago to a direct writer because they had a finished attic and it was in the appraisal. And the price was cheaper because I wouldn't go down to the square feet that it showed online, because the appraisal had the right square feet and it was living space. And I figure it's better to let it go than fight price when a customer is only thinking about that. So we were talking about 400 or 500 square feet was off on the direct writer that bought it, that sold the policy. So that's also important. And to be able to, on a new client, I hate to say not be manipulated, but you got to go with the real information, square feet wise and whatever.
Yeah. And I'll add to that too, to what you were saying, Walter, is that, it's not just the responsibility of the agent to read the policy. We consistently use a duty to read defense where the policyholder has to be aware, they have a similar responsibility to read their policy, be aware of the coverages that are provided, the limits that are provided, the exclusions that are out in the policy. We have mixed results with that defense, particularly in New Jersey. It's difficult in New Jersey, but it does provide some relief to the agents to take that burden off of having to go through every policy at renewal with a fine-tooth comb.
I guess it matters more in commercial, but can't use that defense if the insured was never given the policy in the first place.
Well, that's another issue for sure. Yeah. Always make sure that the policyholder has a copy of their policy, and that's becoming an increasing problem now that carriers don't always provide a hard copy anymore. It's I had a case where we had our motion for summary judgment denied because we couldn't prove, or we didn't prove, that the policyholder had a copy of their policy, even though we established that it was available on the internet and they could have accessed it at any time. So having everything now in an electronic format it makes it, you have to be more diligent ensuring that the policyholders actually have a copy of the policy.
In commercial lines, almost all my carriers now deliver digitally. And I actually attach from my sent email a copy of the renewal email with the policy attached. Even though it's extra paper or extra attachments that are in the file, a digital file, even if the policy is already there delivered by the carrier, I feel like it kind of protects me a little bit.
It was sent twice. Wasn't sent once, it was sent twice, right? So,
once it dropped in from the carrier, and then once I sent it out.
We even go as far as getting signatures from our insurers that we're going to deliver policies electronically. For our larger commercial business, we're gonna drop you off paper copies, and if we know the carrier is going to send paper copies, cool. Oftentimes for the smaller commercial, we are sending out policies digitally, but we won't do that until they sign that they will acknowledge that they will receive their policies electronically. I don't know if you've ever seen a piece of paper like that saving E&O claim, Darren. But that's just one step we've gone to just to make sure that, hey, you said you're willing to accept this policy electronically, in the event that it's not sent in paper.
Yeah, it certainly there's never any smoking gun or one piece of surprise evidence that says haha. It's usually a collection of things, and that is definitely something, another arrow in the quiver to help in the defense.
Yeah, good to think about. Absolutely.
Questions, I guess, again, for Connie Walter on this. Do you have any non-negotiables in terms of clients coming into the door, whether it be certain limits or coverage requests or things like that?
We do in personal auto. We start at 100, 300, 100.
Okay.
In commercial auto, I usually won't go below 500,000 in liability, and in straight GL, I don't go below $1 million. How about you? It's just
Same thing. We do have a lot of clients who are extremely price sensitive. We have clients who don't only have insurance because someone's making them have it, whether it be a lender, whether it be for licensing, whatever it is, and they want the cheapest possible thing they can get. We try to counsel them the best we can into why these coverages are important. And if they still really decline and don't care, typically we would ask them to find another agent, because we use the old adage, if you're going to watch your kids, we want them all. If you're going to ask us to watch your kids, we want them all in our backyard. But if the kids are crazy and it's just chaos running around, they're running down the street, we don't really want to do that.
Good analogy.
That's an Andrew Harris analogy, right?
I could tell that was an Andrew Harris one.
Yeah, I'm sure he's used it in the old dive before, but it really sticks true. I mean, if we don't know, we've run into situations all the time where, a client does leave because of whatever reason. Their nephew is in insurance, but they don't have the market, or so we only have half the, we have the comp, but we don't have the GL. And, we run into situations all the time where the communication, we're communicating with the client, but we don't know what's going on the other side. And typically we want to try to stay away from that.
Darren, anything to add there before question?
Yeah, I mean, that's definitely an issue. We see a lot of times I've had issues where the lender will, say you need a minimum of coverage for 1.5 million for us to secure the loan. They'll get an appraisal, and the appraisal comes back at 2.5, and they'll still only insure for the 1.5 because they just, because their biggest concern is the premium. And then there's an issue, and they come back against the agent and say, well, why didn't you get me the 2.5? And that's usually in cases where there isn't the documentation, the confirmation from the agency client saying, listen, I know the appraisal is X amount. This is all I want, even though it's less.
Yeah. It's wild in the state. We've seen we believe we saw an E&O claim where we offered a coverage to a client 3 years ago. They declined. We had it in writing that they declined. Peril happens. They didn't have the coverage, obviously, but because we didn't ask them the next year if they wanted it again, we were found we lose. So do you know if there's really, obviously, I believe it was a flood claim. It was a situation where it was around Sandy when we gave them a flood quote. They outwardly denied they don't want flood coverage. They're not in a flood zone. They don't want it. They knew flood wasn't covered on their property policy. Flood happens, all of a sudden we're getting served because, well, that was 3 years ago. You didn't ask me if I wanted flood last year, and somehow we lost.
Mm-hmm.
You typically see situations like that where even though the client writes and says no, we still have to follow up and keep asking and asking and asking.
Yeah, we do see that, and that's why the communication that we've been talking about is so essential. You almost have to treat every renewal like it's new business.
Yeah.
And say, has anything changed? Are all of the same coverages still applicable? Is there anything else? And they're not just going to come out and tell you, oh yeah, I need flood insurance. you really kind of have to dig into that conversation and really kind of get at the root of what has transpired in those last 2-3 years that may be a change that requires a change in coverage.
Yeah, we typically try to do quarterly emails to our clients where we can run the home no flood list. So we know you're a homeowner's client. We know you don't have a flood policy with us. We just try to let them know, hey, flood is something that's not covered. Please give us a call for a quote. Things like that. So we try to do it in big batches, but it just, like you said, just kind of building that foundation to defend ourselves in the future is really what the agency should be focusing on right now. And in all their tasks, any CSR, anybody in the agency.
Now, Darren, if he's running that list, and let's say he sends out 30 emails, like in a batch, does he have to attach each one to each client to protect himself in the future if he never got an answer? So does all that, like every one of those emails have to actually be attached to the client screens that it went out?
Not necessarily. I don't know if it's going to make that much of a difference. Maybe best practice, yes, but I'm not sure that it would make that much of a difference. I think the bigger issue would be, and we see this a lot, where agents will send out communications, there will be no response, and then there's an issue, and the agency client says, well, you never followed up.
Yeah.
So, and again, what I was saying before, you can follow every single best practice. But sometimes things get through. Sometimes, the agency client, let's be honest, they're in a situation where they're facing a substantial loss, and they're going to do whatever they have to do to try and make up for that loss, even if it's their own fault.
Absolutely.
And so it puts them in a tough situation. It puts the agent in a tough situation. So, sometimes that follow-up does make a difference.
Yeah, the blame somebody else. We try to memorialize it. We put it into a file. We're actually able to see if they're read, if they're opened, who read it, undeliverable email address, things like that. So all these campaigns we always throw them into an archive file. That's just so we can memorialize it. So we don't like attach each one to the client file from time, from that would take forever. But we do know who is getting the email, when they got it, if they read it, if they opened it twice, things like that.
So we have about 5 minutes left. I have about 10 more questions written down.
Cool.
Obviously not that much time. So I'll ask one more question. And I'll say, what's one thing that I guess we haven't talked about yet that's really on your mind that you wanna say? Like what's top forefront of your mind? What's keeping you up at night? We'll go with Connie again. Start with the president.
My biggest pet peeve is these replacement cost estimators. These guys have heard this. This I think is too subjective. I understand that Darren suggests, and I believe me, I get it when you say you should get a builder to do it. But again, when we're talking about expense, I feel like the client's going to put his fingers in his ears. And I just feel that as agents, those from the sale till it's done, those 60 days as an agent, we are so vulnerable, and it drives me crazy. And we've talked to Dobie, and Dobie has no interest in regulating them so that they're all the same. So they're all subjective based on which product each carrier uses.
When I'm thinking about it, I really just want to implement more strategies in the agency to document review checklist, just making sure that we look at every renewal, obviously, from a price standpoint, and whether we're marketing it, we look at the high end stuff, the stuff that the insured really cares about. But really, when we're rewriting something, to make sure that either the coverage level's enhanced or it is the same as it was. And then to certainly document any type of deficiency in the new coverage from the prior term, such as a deductible even. And, you know, I used the example before when the carrier came in with a $25,000 deductible on renewal instead of a $5,000 deductible. That really had a snowballing effect on some of the other coverages because he was okay with a $5,000 deductible, but a $25,000 deductible is it's a big hit. Especially when he had a, you know, it goes on and on with jewelry, but really that kind of made it really changed the characteristics of the policy. And those situations have to be seen by the agent at renewal. They have to.
I also have a commercial account that the carrier said we're not going to write hired non-owned. And on the commercial auto, couldn't put it on the BOP, it's on a package. So I went out and I quoted the hired non-owned with other carriers, and the pricing, he can't afford it. So it became clearly outlining what it meant, clearly making him understand that he cannot have employees using their vehicles. If he does have employees using their vehicles, he's putting his business in horrible risk, and really making the client understand that. And then when it was all done and the policy renewed, putting it in the renewal letter. Please
Absolutely.
remember. And, you know, we've added these 2 drivers that are now clean onto your driver schedule. They can use your commercial vehicles. Do not let anybody use their vehicles in your business. And again, just that document.
Mhm.
And also letting him decide. He could have moved for $10,000 more if he wanted to. But it just, he made that, to the thing of he made that choice financially himself.
Darren.
For me, the one thing that I would say that we hadn't touched on that honestly could be a whole other hour-long session is the legal duties of the agent. You know, typically the basic standard is, you know, everybody, it's a gross oversimplification, but you know, it's the order taker. You provide the coverage that is requested. That is the basic duty of an agent. That differs greatly from what a lot of agents like to incorporate as just excellent service. And when you start talking, what Connie was talking about the price estimators, when you start getting into those things where the agent's conduct invites reliance, then you're talking about now you're starting to get into an area of a heightened duty. And that holds the agent to a much higher standard than just the ordinary course of duty. Typically, other things that, you know, go into the factors are, you know, the length of the relationship is a factor, the nature of a relationship, is there a personal component as well as a business component to it? You know, no one of those things are going to specifically identify the relationship as a special relationship, but when you start getting into those, you know, what an agent might consider excellent service, you start opening up the door into inviting reliance, offering recommendations, which is why I said before, you know, it's usually best practice to provide the agency client with options and then let them decide. They're going to be the ones that are in the best shoes to know what coverages they need. So give them the options, let them decide.
Great.
Absolutely.
Thanks, Darren. Well, we're right at 12 o'clock right now. So let me say, any last thoughts from our panelists before we conclude?
Did we say document yet? Document.
Get
Did
in
we
it
mention
again.
that yet?
I knew we forgot something.
Yeah, good. I just want to make sure.
I do
Well,
try to keep all my clients open on the bottom of the screen until I've documented it before I close the account. So like in our agency management system, it's possible I could have 10 things along the bottom just to remind myself, get back in there before the end of the day and finish the documenting.
That's like me with Word documents. At any time, I've got like 15 different Word documents open. Well, I really appreciate the time from our panelists especially, but of course, all of our attendees as well. This session has been recorded, so after it's over, we are going to upload it to the PIA YouTube page, and we'll send out a link to all registrants as well. So if you want to rewatch, you're welcome to. we will be having another deep dive. I think we have one coming up in the fall, another virtual one. So stay or look at the PIA publications for topic and date for that. And I appreciate all the time. Thank you so much for all our panelists, Connie, Walter, Darren. It was great. I know we could go for another hour just talking.
See you next
We
week.
should definitely schedule another discussion for all four of us. So
Thank you.
thank you all. I appreciate it.
Have a
Thank
great
you.
day.
Bye, everybody.